We're going to do the last plenary session of the day, which is right on the back of this discussion about financial innovation. Please welcome to the stage Jacques Aschenbroich, Chairman and CEO of Valeo, Ayman Ezzat, CEO of Capgemini Group, Olivier Goy, Founder and CEO of October, Pierre Lababi, Chief Executive Officer of Galit, and Fleur Pellerin, Co-founder, Managing Partner of Corelia Capital. Please, any of these seats, I will be over here on the end. Okay. Does Fleur have a microphone that works? Because I would like to start with her. As we say in French, honneur aux dames. Okay, so just 1/2 second. Okay. Yes, you have, okay. Yeah. Allez. Let's jump right in. So I know it's been a long day for all of you, lots of presentations. Let's keep this one snappy, moving right along to end on time. Short answers, 1 to 2 minute answers per question. Keep it lively. So, Fleur, not only are you today in capital investment at Corelia Capital, but of course, we know you also here in France as former Minister of SMEs, Innovation and Digital Economy. And so who better than you to give us an assessment of the competitiveness of Europe in general, and France in particular, when it comes to innovation in the financial services sector, compared to maybe the US or Asia. We talked about earlier today, Asia is something that people in Europe look at with envy in terms of innovations of usage. So what is your view on the competitiveness of Europe in this field?
I think it would be good, but could do better. If I'm looking at the B2C landscape, for example, I travel a lot to Asia, you were just mentioning it, and I'm just back from Korea. I must say that on the B2C side, when you look at mobile payments, for example, or even banking, I think there's more, probably more solutions, and there's more digitization, dematerialization in Asia. Everybody pays anything with a mobile app or with a card. So I think we need to do some more on the consumer side, probably. I think there could be also a bit of could do better, even though we've done a great progress, I think, in terms of developing innovation around blockchain. I saw that Bank of France, I mean, some institutional organizations have tried and tested some coins or blockchain-based currencies. So I think this is good, but when you look at what Tokyo has done, what Singapore has done in terms of trying to create a sort of sandbox for the startups to experiment cryptocurrencies, for example, I think it's been a bit more liberal, probably. But then I think we have great potential in the B2B market. I think on the B2B side, we have great startups here in France and in Europe. So I think I would give a very good score on the B2B side.
Okay, thank you very much. And by the way, when I throw a question to somebody, if somebody else wants to jump in, just give me a sideways glance and I'll throw it over to you. Maybe just one quick follow-up question for you, Fleur. Do you think the European regulators are actually doing enough to favor these fintechs or other financial innovations such as crowd equity, blockchain, cryptocurrencies? What should European policies be to ensure that Europe will and can stay competitive in the global race towards financial innovation?
I think the government has done a great job on crowdfunding, because I did it, so that's why I'm my moment of self-satisfaction.
Yeah. It's thanks to Fleur also.
No, I think we've been one of the first European countries to really liberalize or give a legal framework for crowdfunding, so crowd equity, crowd lending, and I think it was a good move. And as I was saying, I think on crypto we could do a bit better, because I'm sure that there will be huge development. There was maybe some reluctance because of Bitcoin and because it's associated with the dark web, etc. But I think blockchain is really a technology that will be very, very useful in the future. So I think we should be maybe a bit more liberal and innovative on the crypto side.
Okay, well, Olivier, I saw you react. Olivier Goy is the founder and CEO of October, which is a fintech specialized in lending. You wanted to react to something about innovation and regulation in Europe?
Yeah, of course, we are a lending marketplace for SMEs, so definitely we exist thanks to Fleur. Without this new regulation in France, we couldn't have launched October, so thanks Fleur again. And the truth is that it was almost 6 years ago. It was in October 2014, so now you understand our name, October, that's because of the law. And we have known huge progress in 6 years, meaning that from one framework in France, we are very quickly having a common framework at the European level. So that's the good news from last week, even this week. So that's very positive on the retail side, because we are both dealing with retail investors and institutional investors. And on institutional investors side, we have been pretty lucky to have a new regulation called LTIF, which means European Long-Term Investment Fund, which is just a perfect framework for us if we want to gather institutional investors and let them invest, lend to SMEs at the European level. So we are pretty lucky, honestly, to have such a good regulation, even if it was quite challenging at the very beginning. Just to mention one thing, we are in 5 countries and we have 6 regulators. So that's anyway a challenge on a daily basis.
That was a discovery for me when I prepared this roundtable, because I figured a fintech like yours doing crowd lending was addressing the retail market, but in fact retail lenders are just a very small proportion of what you're doing. Your real business is a professional fintech for institutional investors, as I understand it.
Yeah, in fact, our real business is to finance SMEs. Doesn't matter where the money comes from. So we are really agnostic, meaning if we can deal with retail investors, we are very happy. If we can deal with European investment fund, I know the CEO was in the room, we are very happy too. They have lent something like 100 million euros on October, and we are very happy with that. We are dealing with insurance company. We just won the call for tender from CDC and Fédération Française des Sociétés d'Assurance to manage the tourism fund, so we are very happy with that. So it doesn't matter. As long as we have, let's say, investors willing to finance, to lend money to SMEs, we are here and we try to find the right path to do it.
Let me turn to you, Pierre, because Galit, for those of you who don't know, is a consulting company. It's a division of Sopra Steria, and it's specialized in consulting on everything to do with payment. And so I want to ask you, Facebook created a currency called Libra. The European Central Bank has something called the digital euro. Tell us more about what's at stake in terms of competitiveness between Europe and the United States in these areas.
Yes, so maybe I will react on what just has been said. It's true that the model that we have for innovation in Europe is probably different from the one in the US and in Asia. And maybe it gives more place also to public authorities and giving a strong impulsion to create a framework for innovation. So while in the US we have seen a lot of initiatives in payments for maybe 10 years now from Facebook, Apple and so on, in Europe the action of the regulators has been to push a good regulatory framework, such as the one for open banking, for instance, with the PSD2, and also to favor initiatives from banks like the European project, the European Payment Initiative, which has been much discussed today in the payment session. So the stakes are very important in terms of digital autonomy, and payments is really coming high at the agenda now of all public authorities, because they are strongly related to data, personal data of European citizens.
Yeah, when we talked about open banking, I saw you smile. Eman, you're CEO of Capgemini. You help companies around the world transform themselves digitally. And of course, open banking is also something I'm sure you're working on with your financial services clients. Do you want to react to these issues of competitiveness and standards and favorable regulatory environments between Europe and the US or Asia?
No, I think it's pretty interesting, because I do believe that actually the European regulation is a big source of innovation. Both, things like GDPR on the privacy of data, or when we talk about, of course, PSD2, or what's happening with EPI. I think this is really great sources of competitiveness for Europe, because it provides a framework to be able to actually develop competitiveness and to be able to have inclusiveness. I think EPI is a great initiative. I think it would really, it would really develop the competitiveness of Europe in the payment industry, if you're really able to push that forward in the right way, which you don't have in the US. If I categorize a bit, because it's interesting to look at the sources of innovation as you look from a continent perspective, I would say the innovation in Europe is regulatory driven. Okay? If I look in Asia, it's society driven, right? We talked about cashless payment, mobile, artificial intelligence, facial recognition, etc. And the growth of volume is basically creating a lot of innovation. If you go to the US, I would qualify it as being industry driven, in the way that there is no regulation. You can do what you want, and actually the government is not pushing banks to do anything. So it's a bit competitiveness between them that kind of will do. So if there's not anybody pushing, you will not see as much innovation because they're just competing against each other without a framework, without regulation, and in a certain way, not like Asia with the push to be able to innovate. So it is different sources of innovation, as I say. You know, Europe is regulatory, Asia is society driven, and then the US is, I say, is industry driven. And it's quite interesting to see the impact it has in terms of the innovation.
I love your framework because Valeo is a counterexample to that framework, because you are not regulatory driven in your innovations. You're actually industry driven because you invest something incredible like 10% of sales in R&D each year. So tell us about how you're pushing innovation and what the competition is like for you.
First, I'm afraid that I'm going to contradict you. In a part of our business, we are regulatory driven, in the sense that some objectives have been given, targets have been given in CO2 emission, for example, which has driven the industry towards a direction which is the electrification of the powertrain, both in mild hybrid and in full electric. And that was a kind of a chicken and egg. The industry was ready, of course, the technology was there, but the market was not there. And the market has been pushed thanks to the regulation. Now the question is the regulation good enough? Is it going too fast or too slow? That is another question. So we are a little bit regulatory driven, unlike what you said. The other problem is we are investing a lot, that's for sure. And even in the industry and automotive industry, investing more than 10% of our sales is on the top level. We have no difficulty to finance ourselves, of course. The problem we're having is to find the right balance between what we invest in the R&D and what we need as a cash flow and yearly results and dividends for our shareholders. So that balance between what we invest in R&D, what we invest for the future, and what we need in the short term as a financial result to be able to finance in the future, that is the most difficult.
But one of the things you do, and people may not know this, is that you have an innovation fund. You've had it for the last 6 years. I think you've invested considerable amounts, and you've ended up owning, through the investment fund, companies that are innovative but have nothing to do with the automotive sector. Could you just explain to the audience what that's all about?
The most difficult was to say no to Fleur, because she's very successful for the moment, you are right. But we have decided, we have bought some startup 10, 15 years ago in the camera, for example, which was a 10 million sales company, and now it's between around 1.5 billion. So we have been able to do it. But where the difficulty is to screen all what is happening in our world of the automotive industry, there's something probably around 30,000 startups in our world. So we decided to put some money in some funds in the US, in Israel, in France and China, and in Germany. And I can draw 3 conclusions. First, is a very good invested money. The return is much better than any return I have in the industrial world. So that is very good satisfaction. The second is it has allowed us to screen all what is happening. Like you said, sometimes in our business, but sometimes around our business, especially in the digital world. That is the 2 very positive points. One frustration is, even though it's incredibly successful in the screening and in the financing, we have not detected a business that could be the 1.5 billion business that in the startup we bought more than 10 years ago. So that is a frustration. So 2 very good satisfaction, 1 frustration. And I think it's quite inherent when you put some money in some funds. You are one of the shareholders, normally a small shareholder of the whole, even so, sometimes we have 10% of the funds, but it becomes extremely difficult. Either you go very early, then you take the whole risk, or you go late, and it's too expensive. So it's quite difficult management, but we are extremely happy of having put money. And like you said, you didn't say your last word.
Of course, I'd like to see hands raised in the audience or eventually online for questions that I'll put to our panelists. Let me move on to a follow-up question for you, Jacques. Among these investments that did really well, you ended up owning an online banking leader in the US, a marketplace in China. Even if those are closer to our subject of financial innovation, they take you so far away from the core business of automotive parts. How did shareholders feel about such diversification of their capital?
I would like to relativize a little bit. All what we have invested, a little bit more than 100 million in the 5 last years. In our core business, we have invested 10 billion. So our shareholders don't even see those 100 million. They don't even know it, most of them. So it's not a problem. That is not the problem. And like I said, it has been extremely financially, incredible financial reward. So that is not the problem. The fact that we are owning a marketplace in China has financed all the funds in the very early stage, and the same for the US banking company. So the funds we have invested in has been incredible in finding some, not only some successful startup, but those 2 companies' market cap was around 20 billion. It's not bad.
Let me come back to you, Iman, because you help companies transform. What are some of your findings, observations, lessons, or some noteworthy innovation trends that you see in financial services, or you can even expand to other sectors? And again, if you want to talk about what you see that is most competitive in Europe versus rest of the world in these trends.
So on the innovation front, if you look at what has been happening over the last few years, we see 2 primary changes that are kind of driving the innovation. On one side, it's cloud. And cloud is more around the technology infrastructure, the setup, the ability to be able to manage large amount of data, the ability to provide compute power. And this has enabled all the agility that we see today in terms of some of the new fintechs, for example, to be able to drive higher levels of volume, scalability, security, that is absolutely needed. So cost and agility has been one of the sources of innovation that we have seen in financial services, but beyond, but definitely in financial services. And the second one is data. And data has provided a lot more customer centricity, notably in financial services. You know, we talk about frictionless experience for people in terms of being able to interact in a frictionless way through mobile, through other channels with their banks, with the insurance company, to be able to have access to basically new services in a faster way, in a more efficient way, leveraging from blockchain to all the new technologies. So that's really the 2 big drivers, with an increase, of course, in terms of cybersecurity, in terms of the background, because that's required if you're able to be able to do that. So this has been the 2 primary drivers in terms of innovation, helping customer centricity and agility and cost, and providing a scalability behind. That's what we have seen as well across basically the different sectors in which we work.
Fleur, I understand that Corelia has not yet made an investment in a fintech, but you're investing in a lot of innovative companies. Tell us about the trends you're most excited about, whether in financial services or outside.
So right now it's a bit difficult because of the period, because of the crisis period, there might be some sort of buzz or fashionable investments in some area, and that might blur a bit the potential of these sectors. So we must really make a distinction between what is really now very fashionable and what will be a real long-term evolution. So right now what I see, which is quite interesting and might also be a long-term evolution, is all the enablers of remote work, of course, because there's a major disruption in the way people work, people relate to work in companies. So we see probably, and we will see in the coming months, a lot of applications or conferencing apps and things like that. So it will be probably a big thing. Everything that is related to e-health, sorry, I'm a bit far from fintech, but everything that is related to telemedicine, e-health, will be also probably very hyped in the coming months. But I think, to come back to the fintech sector, I think there might be some very interesting evolutions in the months to come in Europe, because maybe of this gap also between the current state of the art in Asia in terms of payment, what I was mentioning. I see more and more applications. You know, we've heard about the startups like Revolut, number 29, yes, 26. So in terms of customer experience in banking, online banking, so I think this area, and also based on artificial intelligence and blockchain technologies, will increase probably the customer experience, enhance it, and we'll have, I think, very good startups in this field.
We must address, because we are Paris Europlace here, and the financial investment must be realized at one point. You know, it's one thing to buy, it's another thing to sell upon exit. Don't you think that Europe is still penalized by not having the equivalent of a NASDAQ to be the perfect exit opportunity, which then favors the initial investments for investors, knowing that they can get out at a nice liquidity opportunity on the stock market? Do you feel that we're held back in Europe in terms of our opportunities to do technology, early stage investing?
I think so. There's been a lot of progress, probably huge progress over the past maybe 10, 15 years, but there's still a way to go, and we still see, and you can speak with founders of tech startups who want to get listed and who have difficulties to make analysts understand their models and provide the right valuation analysis. So there is still a big gap, which is, I think, an education gap, basically. Maybe the analyst world is not, you know, as mature as in the US, or maybe as in the UK, for example, in terms of tech startups, to have the right valuation approach. So, but it's, you know, there's room for progress and for hope, I think.
Olivier, I mean, you've been through this as a startup trying to raise money for your own business. Do you want to share some personal experience about the difficulties of finding investment to get going? And if you could do things over again, would you do them differently today?
Honestly, I think that as long as you have a good startups and a good project, you find money, honestly. Especially in France, because we are pretty like in France, we have many pillars. We have retail investors. It's a long tradition of gathering retail investors and have them investing in private equity. Maybe the last news on this subject is the new fund launched by BPI last week, a 100 million funds gathering retail investors sold online, and thanks to our technology, by the way. October provided the technology to BPI for that. So you have retail investors. You have a lot of institutional investors like Corelia, for example. So you have many investors investing both in Series A, B, C, and so on. We have a lot of corporates investing. Ourselves at October, we have been financed by both Allianz and CNP Insurance, for example. So you have a lot of corporates interested in the fintech space. And last but not least, you have a lot of foreign investors looking to French or European startups, even coming from the US. So you have a lot of possibilities and a large range of possibilities. But just to bounce back on your previous question regarding exit, because you're right, you have a lot of money coming in, and then you need to give money back. Of course, you have the problem of listing a company, but you have also the problem of selling a company to a corporate. And corporates are still too shy when it's about buying a company. And maybe they are too shy because their own valuation is too low. You were talking about the payment, for example. If you think about it, the added valuation of both BNP plus Société Générale, and they are both, let's say, interesting banks, is less than Adyen, for example. Adyen, if you don't know them, it's a Dutch company in the payment industry. It's only 1,500 people, and it's valued more than both BNP plus Société Générale. So that's your challenge. Adyen is listed now, okay. But if you're running a quite large company and a successful one, even a unicorn, meaning a company valued more than 1 billion, how do you sell a company of 1 billion having losses to a normal company, let's say, valued less than 10 billion? How is it possible to buy something valued 1 billion when your own valuation is below 10. So we need more giant corporate ready to invest and ready to trust the future and to make this strategic investment. You have a lot of this investment in the US. You have very few in Europe.
Oh, wow, this is great because Valeo is a big corporate, Capgemini is a big corporate making M&A deals, and I'm sure they have different views on what prices they're willing to pay for startups. Let's start with you, Jacques.
I'm sure.
No, it's an extremely difficult topic, only because we have to have our short-term results at the same time that we invest for the future. In our world, there are some companies, you have probably heard about Tesla, you have probably heard about Uber, but there's one company, the name is Mobileye. It's a partner of ours. It has been bought 15 billion by Intel a few years ago. At the time when we were working for them, I must say it was before my time, but I think I would have taken exactly the same decision. It was valued very little, a few hundred million, but a lot of losses. And we took the decision not to invest in that company. And it has been bought 15 billion later on. And I don't regret it anyway, because at that time we could have done it.
So what Olivier is saying is correct. The corporates won't pull the trigger on buying startups.
In that case, very, very difficult. But the other way around, I told you about a company we bought. And when I joined Valeo at that time, it was only, it was 2009, so another crisis. It was losing 2 million a month. So we are able to do it, but we don't do it all the time.
Amen.
Yeah, so if you think about, you have to think about how we innovate and how we create innovation. Definitely different ways. We are a service firm, so part of it is acquiring capabilities. That means building our own innovation capabilities. If you in areas like data and cloud, there's not enough people in the market anyway to fulfill the needs that we have. So we hire, we train, we grow people, and that's a primary source of innovation. The second one is, of course, acquiring capabilities. So we do acquire capabilities, but it's true. There is a reluctance to be able to go and pay 15 times, 20 times, 30 times revenue for a company, whichever it is, because you have to go and justify to your investors behind. Even if you spend 500 million on a company that's worth 50 or 40, you're going to have to make the case of your investor why you invested 500 million, and then every quarter they will follow to see.
These are the same investors, by the way, who value a Dutch startup more than Société Générale and BNP combined. So it's confusing to see.
It is confusing, but on the other side, they allow these companies to do that and lose money. They don't allow you to do the same thing, right? So it's you don't have the same right.
Deux poids, deux mesures, as we say. Double standards,
right.
okay.
But the other thing we have done now is that we have created a venture fund, right? And service companies not very disciplined in terms of managing capex and investment because it is a service firm. So what we have done, we have created Cap Ventures, which is an investment fund with a private equity to discipline us in the way we do that. And when we identify interesting startups that basically can be strategic to our business, we actually invest money in them, you know, as seed fund or if they need it, to be able to get involved with them in terms of as a strategic partner at the same time as helping them in terms of basically growing and finding small seed money. But we are not at the stage where we can buy companies at 20, 30 times revenues. We don't have yet... we're not close to that yet.
Pierre, yes, I see you want to jump in.
Yes, so I just wanted to comment on the valuation because I think we have also good grounds to be optimistic for Europe. Part of the, if we take the example of payment, first we have Edion. I think the key part of the valuation here is that you have a company active in several European countries. So if in payments, if we look at the starting points, there are very different landscapes, very different market players in Europe. And it's a long way to get to European integration and to get to European champion and also to get to European world champions in payments. So this is starting. And
which is not the case in the US with an integrated market.
Exactly, this is a big difference. In the US, you also have this very strong marketplace, these digital ecosystems from Amazon and so on. And they are concentrating all the investments and they are also strong acquirers of companies. The way I see it is that this will change in Europe because there is a strong push from public authorities at the moment, and this has been the case for maybe 5 to 10 years now, with a consistent strategy to integrate European payments. If we have discussed shortly about EPI, so this project of integration, which is more led by the banks. We have also mentioned the digital euro, which is a strong push also because we are at a risk here to fall behind because we have the initiatives from the Chinese Central Bank. There is this Libra initiative from Facebook, but we see that the European Central Bank and the National Central Bank are reacting swiftly. And we have this open banking and retail payment strategy, which are common playground now for all fintechs in Europe. And I think for the years to come, this will give rise to strong national European champions. And this is driving much higher valuation probably.
Oh, yes, Jacques, jump in.
I would like to come back to something you said, that our investors would be the same that the investors of those companies that are valued 10 times, 100 times their sales. They are not. We have looked very carefully on those very successful startups. Their investors' basis is very, very different from ours. And the one coming to us, and I guess it's the same for you, Ilman, they're very, very different. They are valuing ourselves in a multiple of EBITDA or multiple of free cash flow. It's very different. So it's not the same basis of investors.
Olivier, you want to jump in?
Yeah, I would like to say that let's say traditional banks, for example, are not only shy when it's about buying company, but are only shy when it's about investing. Just to quote one example, you know, during the COVID crisis, we had a lot of calls coming in from traditional banks saying, okay, we have some problem to originate loan remotely, so you could maybe help us with your toolbox. You have the technology for that, so please discuss together and see how we could use the toolbox to distribute loans to our customers, mainly to SMEs. We say, okay, no problem, we can enter into a discussion. It's not about buying October, it's buying the technology, which is slightly different. And of course, there's a price for that. And so a few millions per year. So we say, no problem, a few million per year. Say, oh, that's a lot. That's a lot. And the recent bank, which was hesitating in investing, was, let's say, buying a huge communication campaign in Le Figaro and Les Echos to say, we are a huge digital bank, oh, wow. But they were not ready to invest a few million euros to really progress, not claiming that they are digital, but really doing it. And they precisely know they are not doing it. So my point here is that at the top management of banks, and I can speak seeing the situation in 5 different European countries, they need some courage to really do the transformation they have to do. Otherwise, they will miss the train. And it will happen what is currently happening with the payment industry. So if they want to make sure they stay at the top, they have to invest now, not only to claim that they are digital, but really doing it. And honestly, I can testify that discussing with them, they are not always where they claim they are. So now they need some courage to invest more.
I would like to bring Fleur into this discussion because we've all of a sudden ended up in an area of the discussion about types of investors. So maybe the trade buyers, the industry buyers, the banks are not the right types of buyers, but we were talking earlier, Fleur, about the fact that Europe may not have the right types of investment funds, big, courageous, mega VC funds to pay the prices and get these startups off the ground. We talked about NASDAQ, no European NASDAQ. What about the absence of major VC funds in Europe of the type we see in America?
Yes, you're right, because this industry is a continuum, actually. So some funds are specializing in early stage investment or seed investment, then comes the VC investors, and then come the late stage and growth investors. And at some point, when I was in office, there was a sort of what we call the Death Valley of financing in Europe, not only in France, in Europe. So there was enough money for seed and for early stages, but there was a sort of gap like that at the growth and late stage. Why? Because you need funds probably that are pan-European, because the market is not deep enough in one country, like in France, to do only growth deals. There are many, maybe in Europe, maybe hundreds of growth deals, so there's not enough in one country to allow for one big investment fund specialized in growth stage to deploy all his capital. So we needed to have funds in billions, not in millions, but really in billions, like the Vision Fund, maybe a bit smaller, but these kind of funds who could make acquisitions also sometimes in hundreds of millions, because at a later stage, even if the valuation is not reasonable, but it's still companies that are more mature and whose valuation is high. So we need some funds who are 500, 600 million euro. And actually, we've created them over the past years, Maybe 10 years ago, there was very little European funds that had this, critical mass.
And you agree this is a professional job. In other words, we shouldn't expect
Yes.
the banks or other industry players to fulfill that gap in the funding continuum, because that's not where they intervene generally.
But they could. It's a different thing, because the banks usually they come and they lend money, and I'm speaking about equity, investing in equity.
Yeah.
It's a different kind of financing. But now I think with BPI we created a large venture fund, so BPI helped consolidating this market, and now you have pan-European funds. I try to become a big, but I'm a very young fund. But when you look at Atomico, Baldaton, they have funds that are 800 million. And with 800 million or 1 billion, you can start to consolidate and to help the scaling up of these companies. And what we need after that is what Olivier was saying, is really acquisition, people who can acquire. And maybe it's some Valeo can do it sometimes, not every day, because they need to report to their shareholders. But maybe, the audience of tomorrow, because their market share is now so high, maybe they can become tomorrow's consolidators, because they can buy by exchanging shares, and the high valuation of their stock means that they can make this acquisition. So maybe tomorrow we'll have different types of actors, legacy corporates, but also maybe these startups who will become the new consolidators of the market. And maybe it's good. I mean, what we need to do in Europe, I think, is organize European consolidation. If we want to be stronger in the competition against the big tech giants that are mostly Chinese and American, I think we need to help the consolidation in the ecosystem.
I'm sure you agree with this, Eman.
And I agree. So just to come back on the earlier point, I think it's important to favor the relationship between the fintechs, whether insurtechs or banktechs, and the banks and the insurance companies. If not, I think the banks are missing a big opportunity to be able to accelerate the innovation cycle. We have mapped across all the different areas, payments, security, cybersecurity, analytics, etc., the fintechs and the insurtechs. And when we work with a bank or insurance company, we try to bring to the table who are the 3 or 4 fintechs they could work with to help accelerate. But it's true that the adoption is not always simple, and often, because banks consider they are tech companies, they want to go and invent what already exists, where they should leverage, because they should look more for the speed to market and how fast they can get to market, leveraging some of the technologies already created versus going and recreating the wheel. But the temptation is, no, we can do something better ourselves.
That's exactly true.
Jacques, did you want to react to that?
No, I would agree. We are, like I said, in a world that there are lots of startups. Sometimes we are amazed by the valuation of some startups with no sales, and we are competing against them. We have already sales, and it's not valued in our overall valuation. There is something which is happening in the US. We had just discovered something that might have existed for a long time, is a SPAC, which is a way to be listed in a very, very short way. That doesn't exist in Europe. How did it exist in Europe? So we need to look at it through the US financial market to see whether it's something that interests a company like ours or not, what it means for us. So we see innovation in the financial world, in the financing world in the US, which is totally unknown to us. And thanks God we have some partners in those parts of the world that can explain to us what it means. But we see some ways of valuation of companies that doesn't exist for big corporations like ours, but is a way for those startups that are our competitors to be valued very, very fast and listed very fast in a way that we couldn't have imagined only a few months ago.
Thank you. Thank you very much. Let's give them a warm round of applause. And let me now welcome to the stage François Villeroy de Galhau, Governor of the Bank of France, for some concluding remarks.